it's the iconic branding that catches my eye. Talk to me about the numbers. These margins are what the market will focus on, I think, first of all. 10.6%, what drove the margin beat? Put it in context.
First, I'd say when we went into this quarter, we knew that it was going to be very challenging. Many of the markets were totally shut down. The U.S. had started to go into the COVID in a very bad way. So it was going to be challenging. So we also communicated that before. And now I think we ended up with a margin which is better than we expected, but mainly driven by strong cost mitigation in all our businesses, but also an extraordinary good quarter from our motion business.
Okay, let's talk about, you say it was a hard lockdown, and you look through the numbers, Europe, the USA, all of those numbers under severe pressure. What improvement in visibility can you give us? What is the momentum as we come out of lockdown?
As being a global company, we are in the North Americas. We saw 23% down actually in orders in North America. In Europe, which is of course home here, is around 14% down. And then we saw China, which was actually positive with 3%. So it's a good recovery during that part of the world.
Is there a sense of relief in China? Talk to me about the demand and the supply side. Production. Is production back at 100% in China? And what's the robotics demand like in China?
I think the activity is actually absolutely good, and I think it's catching up a lot of that which was lost also during the first quarter. How sustainable that is going to be in the future, I think it's very much dependent on that the rest of the world is coming back and start recovering, because China is also dependent on the rest of the world and not only their own market.
How unsynchronized is the recovery, Bjoern?
It's difficult. I mean, we see the COVID is still active in many parts in the southern hemisphere, but also in North America, it's still not under control. Of course, it makes people nervous. Nervousness is not good for any kind of market. So it is challenging for us, and we need to see improvements in the coming quarters.
Now, you say cost mitigation is what drove the margin beat in this particular quarter. What the market really wants to know is you've got 18 divisions, 4 to 5 don't hit your EBITDA target. So where is most at risk? Is it the low margin businesses that you probably want to look at divesting?
No, I mean, to put it, if you see during this quarter, we can see, which is very rare compared to normally. Normally in a downturn, service business is the most resilient part of the business. I'm very much pro the service business. Now in the COVID, when you have a shutdown, we have a different situation. It's sometimes difficult to conduct service, people moving between different countries and do. So what we see during this quarter is that the service business, which normally is the resilient part of business, having more challenges. When we're looking at the different divisions, it's of course important what kind of segments they are operating into. I mean, we talk about robotics, which is of course very much exposed to the automotive industry, and that's also why we see 25% down in both orders and revenues. That's the part of the business which is most severe. But we also see oil and gas market that, by lowering the prices of the oil, that affects that part of the market. So yes, we need to see these segments coming back.
If we look at some of those underperforming businesses, Dodge, USA, the marine propulsion and the superchargers, the market wants to get some indication from you. This strategy, you've got a turnaround strategy to deliver for these activist investors. Are these the kind of businesses that will come under the microscope?
I think it's too early to give any kind of indications. We'll be back during the Capital Market Day in November. We'll talk more about it. I think when you look at these businesses, I mean, you were mentioning the Dodge business. It's a very U.S. business. We also have Thomas & Betts, which is the installation products within electrification, also very typical North American businesses. Yes, they are, of course, more affected when it comes to volumes as they are operating in these markets. But I think this is something which is temporary. Now we need to look beyond COVID and the direction. Where are these businesses going to drive, and where are we going to create value going forward?
Are you concerned the auto business is fundamentally scarred, or there's a risk of that happening to the auto business, just at a top level?
I think the automotive industry is going through a shift. Of course, with the old combustion engines moving more over to electrification. If we look at our exposure towards the automotive industry, it doesn't really matter. We are more in the assembly lines where the robots are operating, and that's where the focus is. So I believe that that part of the market will be very interesting also going forward.
Now, I mentioned activist investors when I was talking about your company earlier on. Those conversations, how much time are these activist investors really going to give you? You're in the seat just over 100 days. What's realistic in terms of delivery for the activist investors on the roster?
You know, from me, I don't separate our normal investor and activist investor. I think we all have one common goal, and that is to make sure that ABB delivers value. You know, for our customers, for employees, but also for the shareholders. That's my job, and that's what we need to drive forward. And I think every shareholder needs that.
Do you need to do a transformational acquisition or divestment to shift the share price?
No, I think I've been very clear also when we met during the 10th of June. We have made numerous of large acquisitions which are still not operating on the levels where we need. So our main focus now is to getting our operational and the profit margins to the right level. And I've been very clear to you and to everybody else that I will not be satisfied before ABB delivers 15% returns.
To close then where we started, the margin beat was driven by cost efficiencies.
Yes.
Natural Bloomberg question, cost efficiencies, more to come, and does that mean you've got to reduce headcount?
You know, I think it is a very special time. I mean, we talk about short-term challenges and long-term opportunities. We need to take us through this challenging time. And we're doing that with different kind of cost measures. Some of them are temporary. We're keeping that down, trying to keep the cost under control. The important thing is when we get out of the COVID-19 is that where are the demand levels in the market? And that is what our businesses need to adjust their structure for. And this is going to vary between the different segments where we are operating.